And showtime. Ladies and gentlemen, welcome to another episode of the Channel Pro 5-Minute Roundup. Look at news, trends, and tips for the SMB channel in 5 minutes or thereabouts. My name is Rich Freeman. I am executive editor of the Channel Pro Network, also a co-host of this program. I am joined this week, as I am every week, by your other co-host, Eric Simpson, business transformation and improvement advisor to MSPs and other IT providers. Eric, how's it going?
It's going great, Rich. It's going fast. We are now officially in the second half of 2022. Man, it just went by like that, didn't it?
You're absolutely right. And we are right in the thick of the summer of 2022, and it just feels like that kind of fell right on top of us too. It is amazing how time flies.
Absolutely. All right, Rich, what do we got in store for our audience today? Top story.
Top story, interesting development too. As folks know, more and more of what SMBs do that matters, they do in the cloud. This was true before the pandemic. It's been true that much more in the last couple of years or so. And yet, the tools that most MSPs rely on have not traditionally been very good at cloud management. The RMM tools are excellent at managing PCs and servers. Most of them either can't handle cloud at all or really only do so in a limited kind of way. And this is why, as we've talked about on this show, you're seeing all of these born in the cloud first kind of management vendors out there, Nerdio, Skykick, Augment, Jump Cloud, all these companies out there creating products specifically for that cloud management task because the RMM systems can't do it. Now, we were talking just a few weeks ago about some news from Kaseya during their Connect IT conference. They were previewing a new release of their RMM system due in November that will include cloud management capabilities. Felt like, and we have to kind of wait and see what that product is all about, how well it does cloud management, but it felt like kind of a development in terms of the traditional RMM software makers heading finally in the direction of doing cloud management too. Well, lo and behold, Eric, this week we find out that Enable, another one of those big time RMM vendors out there, has acquired a cloud management vendor named SpinPanel. Now, what is SpinPanel? What do they do? They make a multi-tenant management system for Microsoft 365 and Azure Virtual Desktop. The overwhelming majority of ChannelPro readers certainly out there are really kind of immersed in the Microsoft cloud. So this is going to be a tool that's going to cover most, if not all, of their needs. Automated tools for deploying and configuring and managing Microsoft 365 and AVD workloads. There's security functionality around roles and permissions. You can establish baselines for your clients and monitor compliance against those. There are features as well in terms of creating your own pricing schemes and product bundles, adding your services on top of those cloud services. So a pretty robust cloud management tool that is going to land Enable for the first time in this cloud management market. And so just in a matter of weeks, Eric, we find ourselves with two of the either 4 or 3 big RMM companies, depending on whether you count Datto and Kaseya as 2 or 1, because Datto is officially part of Kaseya right now. But now we're seeing at least 2 of the biggest names in RMM software somewhat belatedly taking serious steps toward cloud management. The proof is in the pudding. We're going to wait and see how well these tools work. Enable is saying it's going to be later this quarter before they officially start offering the SpinPanel software. And who knows, I don't know at this point when that product starts integrating with Enable's RMM systems. Is there some plan to have a single pane of glass for both those tools? So there's a lot to wait and see and evaluate. But it is interesting that we've now got 2 RMM companies really kind of heading down that road towards cloud management.
Yes, Rich, and we can only foreshadow how many more we will be covering the balance of 2022 because this is it's almost like the Moore's cloud law, right? We're seeing this rapid acceleration now as these strategic vendors for channel pros and MSPs really now begin accelerating the flywheel to help lead this cloud, the management of these cloud workloads, these cloud migrations and things like that, right? So we're seeing kind of the opposite side of the pendulum swing this way when, before the pandemic, not a lot of news on this front, right? But as a result, I would argue, of the pandemic, of seeing the increased interest and budget of business owners and enterprises in accelerating this movement toward the cloud to help support, hybrid workforce and all these other things. Now we're on that flywheel, and it just seems to be getting faster and faster.
Yeah, absolutely. And I've been for a while now. I've been kind of waiting to see who is going to kind of win this race in cloud management, because you've got all these born in the cloud companies. I was referring to some of those, but they're smaller, they're younger, they're less capitalized, they have less brand recognition than the companies like Enable and Kaseya and ConnectWise, et cetera. Those companies have tons of brand recognition, lots of partners, lots of money to draw on, but they really hadn't been doing anything around the cloud. And now we're finally starting to see that change. And so this has gotten to be a more interesting race.
Yep, and I, would foresee there to be enhanced interest in acquiring some of these vendors, these cloud management vendors, just like we're seeing the acquisition of cybersecurity vendors and other things like that. So these are the two really strong product categories or service categories that we see MSPs delivering to these post-pandemic buyers, right? So, cybersecurity, cloud, migration and support, and of course, anything that helps with kind of hybrid workforce, management and support.
Well, Eric, if you are not doing cloud management today, you're probably leaving some revenue on the table. But your tip of the week, according to your tip of the week, maybe revenue isn't the only thing that folks in our audience should be focusing on.
You're right, Rich. It's all about focusing on profit versus revenue. And I'm doing a lot of M&A activity for partners and vendors, and I'm coming up with, I'm evolving my valuation calculator. I have a calculator that I use to drop in all these different variables, and we do different valuations based on EBITDA, net profit, right at the end of the year for a company, or revenue types and different categories of revenue that'll yield different multiples. So there's a multiple for EBITDA, percentage of total revenue, and then there's different multiples for different types of service streams. And you'd be surprised at just how little the multiple is for some of these things, like T&M services, time and materials is like 0.14 for every labor hour. So when we look at what it costs us to deliver these services, we start evaluating from the perspective of, okay, when I'm trying to position my organization to have the highest valuation and exit, I really need to focus first on profit, because at the end of the day, notwithstanding anything else, EBITDA is a very strong factor in valuations from a multiple perspective, but only, but as well as from a profitable operating posture. What services are we delivering? How do we evaluate the profitability of each of these services, just so that we're maximizing that profit, which allows us to hire more people, right? To invest in more products and services, to do marketing, to get our sales team get hired, and to grow the organization, investing in ways that can be forecasted based upon the highest type of revenue that is valued, which is recurring revenue, right? So monthly recurring revenue, MSP stuff, MSSP stuff, that is the highest type of revenue. But first we have to solve for the profit. We could have tons and tons of revenue, but if it's not profitable revenue, then it's actually going to hurt us in valuation and stunt our ability to grow. So again, would you rather have, $100,000 worth of revenue at a 10% profit margin, or $100,000 worth of revenue at a 50 or 60% profit margin? I would vote for the latter.
So, Eric, this is 100% consistent with what I hear from M&A consultants who work with MSPs. And I have an opportunity to speak with folks like that fairly regularly. And there are multiple variables, multiple numbers that a potential acquirer will look at, including, percentage of revenue that's recurring revenue, for example. But the single most important number, the number that will get you an acquirer's attention and even just kind of begin they're evaluating the rest of what you do is EBITDA. EBITDA is the number that determines whether or not you are viewed as a good potential acquisition target. So absolutely critical thing for folks to be devoting attention to. And the other thing I will point out, this is actually really kind of timely advice because as we know, this is actually a pretty good time to be an MSP, right? There are more and more companies out there who know they need one, bigger and bigger companies, or maybe for the first time doing business with an MSP. So if you're good at what you do, your top line is probably pretty healthy. But the other thing that we also know is that interest rates are going up and inflation is driving the price of everything you buy up. And so your top line number might actually be really healthy, but that doesn't necessarily mean your bottom line number is right where it ought to be as well. So at this time in particular, for the reasons I just outlined, you actually do need to be focused a little bit more on profitability and EBITDA than maybe you would be ordinarily, and make sure that you're managing expenses and keeping those margins up because it's harder to do that now, given a lot of the economic conditions we're dealing with.
You're absolutely right, Rich. And in fact, I had a call with one of my consulting clients today, and I advised her to add a trip charge one way for on-site support. I mean, maybe we can splice that together. So, Rich, you're absolutely right. I had a conversation with one of my consulting clients today, and I advised her to actually add a trip charge one way for all on site service. She typically charges a trip charge for folks that are not on a managed service agreement. And I said, look, these are very challenging times. And now is the time, the cost of delivering on site service has probably I can't even imagine what the percentage increase is, but just the cost of fuel itself. So look at ways to maintain your margins and improve them if you can, because like you said, Rich, at the end of the day, the number one biggest factor in determining valuation is going to be EBITDA.
Absolutely. Great advice. Leaves us with time for just one more story. And Eric, we actually have a professional soccer team, an MLS franchise here in Seattle. I will confess, though, I'm not a big soccer fan. I don't pay a lot of attention to the game. But even I know that a final score in a soccer game that is 91-1 is a little bit unusual. And this is why in Sierra Leone, the professional football league in Sierra Leone, the head office of that league is investigating a couple of different games in that league that took place recently between a couple of different teams, one of which came out 91-1, and the other of which came out 95-0. So 90-minute game. This seems a little bit unlikely, just a little fishy, maybe. So they're going to kind of look into it and see if there is a legitimate explanation for those lopsided scores. By the way, at least according to this article that I'm reading, there was no sort of official initial explanation offered by the teams for why those scores were so lopsided. But it turns out those are not the most lopsided scores in the history of professional football. There is, in fact, this is thought to be a game that took place in Madagascar in 2002 when AS Adema beat SO Limern 149-0. Now, in that case, there is an explanation for what happened. Basically, the losing team, SO Limern, was infuriated by what they thought was a terrible refereeing decision, and they were so upset about it that they scored on themselves 140 something times as a protest, and then presumably walked off the field. So there has actually been an officially recorded 149-0 soccer game.
Well, check those machines, check the video. Something fishy's going on there, Rich.
Yeah, I'm not Sherlock Holmes, but I think you might be right. Well, folks, that is all the time we've got this week on the 5 Minute Roundup. We thank you so much for joining us. We'll be back again next week with another episode. And you know what? That episode will be both a video and a podcast. So if you're watching the video, but you also listen to podcasts, go to wherever you get your podcasts, whether that is Google or Apple or Stitcher or Spotify, you name it, you're going to find us there. Please subscribe, rate, review, make it a little bit easier for other folks out there to find the show. If you are listening to the podcast but curious to check us out on video, thing to do is go to YouTube, look for the ChannelPro Network channel on YouTube. Once again, you get an opportunity to subscribe there. And if you click the little bell icon, you'll even get notified when the new episodes go up. You can read more about Enable Buying Spin Panel. You can also get all sorts of great business growth advice for your company every day at channelpronetwork.com. We've got terrific new content for you there every day. You want to learn more about Eric and the work he does with his clients, please visit ericksimpson.com. That is ERICK Simpson.com. So again, we thank you very much for joining us. We're going to see you again in a week. Until then, folks, please enjoy the rest of your week. Eric and I are enjoying the rest of your week already.